One of the most common things that I hear business owners say when it comes down to cash is, I feel like the money just comes into the business and goes right back out. Well, today we're going to be talking more about cash flow, and we're going to be talking about why your accounts payable might be part of the problem. And stay tuned for the tax tea of the week, because we're going to be talking about a former university employee who is currently under investigation or on trial for embezzlement of probably over $3.5 million. So stay tuned for today's episode. Welcome back to today's episode where we are going to be talking about cash flow and accounts payable. And welcome back to the show, Ms. Lola Turner. Welcome back, Lola.
Thank you. I'm happy to be here.
Awesome. It's good to have you back. So last week we started a topic where we talked about cash flow and we talked about accounts receivable and some of the amazing things that business owners should be keeping in mind when it comes to the topic of accounts receivable. This week, we're going to talk about the other side of that, because I do think it's very important for people to understand, like, receivables, as I said last week, it's money that belongs to you that is sitting in someone else's bank account. Somebody else has your money. Now, on the other side, when it comes down to accounts payable, you have somebody else's money. So definitely want to talk about that. But before we jump into that, how was your week?
My week has been good. Great, exciting stuff. We launched officially our Google Data Studios and LiveFlow dashboard. So that was very exciting. That launched on Saturday evening, I think. And we've sold a couple of courses already. And so I'm just really excited about that. So that was kind of a highlight of my weekend. So that's been really good. And then just really excited about some of the great things that we're doing over at the Small Business CFO group. So it's been good. I mean, I don't know, like maybe it's a bit nerdy of me, but I just really enjoy helping other people grow their business, and especially when it comes to finances, because I mean, that's what we're really good at. That's what I'm really good at. So whenever I can help someone improve and understand and kind of bring clarity to what they're doing, it always makes me feel good and feel like I'm serving my purpose in the world and contributing. So yeah. How's your week going?
Week has been good. I mean, it's been filled with, meeting some deadlines. We're working on some processes, because I do think overall the company is growing. We have some new people on the team. We're
Yes.
actually in the process of hiring, so we're growing the team even more, and that just means going back in and creating more processes.
Yeah.
And so I also think is helping our clients understand some things, because as I've had what 4 sales calls this week. 2 new clients have signed on this week. So 2 out of
Applause,
4.
applause, applause. Welcome to
Yes.
the
I mean,
family.
that has been amazing. And I mean, so 2 out of 4 signed on this week with those sales calls. The other 2 actually are still in conversations. One of them asked for, they kind of wanted some, references on or some customer testimonials on our firm. So I'll
Ooh,
get them those testimonials. I think that one's going to move through. Another one, we were having the conversation earlier. They want to look at moving forward in January. So, we may go, 4 out of 4 by January. All 4 of these that we talk to will come on board as clients. And one of the big topics that we often talk about is, as we get to the end of the year, one of the things that I highly recommend for people to do is to do a spend by vendor or expense by vendor report, to where we can look and see, who have you been paying money to. And as we were talking about that, that was one of the pain points that a couple of business owners were saying, as far as, understanding who I need to pay, because sometimes, these large payments come out of the bank account and it just seems like it just sucks all the cash out, because we got to pay all these people. And I'm like, that's an accounts payable problem. Like we need to kind of create a schedule on that and have a better approach to it. So I was like, that was timely for today's topic that we had planned to talk about on the show. So it's been a good week, and I am looking forward to getting even better because this is the week of Christmas. Well, Christmas is on Sunday, depending on which day of the week your week starts on. So I'm looking forward to the rest of this week as well.
Well, awesome. You said a lot in that last 30 to 45 seconds. Actually, it's probably more than that. But I guess just to unpack that, by the time this episode airs, it will be 2023. So that is something to look forward to. So happy New Year for our audience that's going to be listening in. But I mean, it is exciting. I think the holidays really just kind of get you to the point of reflection. I think a lot of times people reflect on how the year has been. And for some business owners, they're excited because, they've grown, their businesses has seen, I think actually I take that back. I think anybody that survives another year in business has something to celebrate. I think that's from my perspective, that's a baseline. But I think it's always when you get to the end of the year, people are always, reflecting on the year, what went well, what didn't, or at least you should be, what went well, what didn't, what can you make adjustments going into the new year, what are some strategies you can implement. And I think the AP discussion is essential for that because it's really a good time to kind of start to reflect, right? Like, who did you pay and why did you pay them? And really start to do that review. And I think prior to working in commercial finance, when I just did plain accounting earlier in my career, I didn't really understand the value of having a good accounts payable process. And by good, I mean actually being strategic about how you manage your AP, because I think a lot of times people think, especially on the personal side of things, you think, hey, things are due when they're due. I pay them when they're due and I just keep it moving. But when it comes to your business, your AP and your accounts payable is really going to be, you need to be strategic about, are you managing the money that's going in as well as the money that's coming out? And so you really need to kind of understand, kind of play that balance game between hey, you want to make sure that you have enough money to pay all your bills. But then at the same time, you want to also target it to where, hey, is the money coming in going to cover all the bills that I have to pay? And it does really require strategy. So I'm excited to talk about that today. But I think it's easy for people to just think whatever just comes in, it comes in and I pay it. But it really is a strategy. So let's dive in.
Yep. So where I like to start is just to make sure everybody's on the same page. So when you hear the word accounts payable, because for some people it seems like an irrelevant word because they're like, well, we use cash basis accounting, so why does this word matter? And when I look
Mhm.
at my balance sheet, there's never an account that says accounts payable. And so what I like to look at this is payables would be any money that you owe to someone else that is not a loan or like a line of credit. That's what I would consider to be accounts payable. So for a lot of businesses, smaller businesses, I would look at your credit card balance as kind of in the same nature. Whereas like, hey, that money is due, like that full balance is due within 30 days. Now you can make a partial payment on it and they're going to charge you interest for it. But then there are some other businesses where, let's say, if you have some contractors that you're using, that contractor will send an invoice to you. And until that invoice is paid, you owe them that money. And so that's what I would consider to be accounts payable for the purpose of this conversation. Now that we've kind of got
Yeah.
that definition identified, I think the really what you showed up here for is to really figure out how do we manage it better and how do we understand it better, and how we understand how it impacts our cash so it doesn't stop our business. So I want to jump into some of the first tips, and my first tip about managing accounts payable, I think, is getting a good process. So when it comes down to getting a process, what are some of your thoughts on that?
I think I would say just really having an understanding of what's going in and what's coming out. I think that sounds very generic. A lot of times when you talk about that and you talk about establishing a process, I guess maybe let's just take a step back. I think the first thing you need to understand is like what tools are you using? Like, right? Like when we were talking about accounts receivable, we talked about making sure that you have the right payment or the right AR tools that make it easier for your customers to pay you quicker. I think the same thing applies with your AP, right? So like how are you tracking your spend? How are you tracking what comes in and what's expected to, I guess, what invoices come in that you owe money to someone else for, and the timing of when those need to be paid. So I think as a baseline, first of all, understand what tools you're using and how do you leverage those tools to kind of put you in a position where nothing falls through the cracks. So I would say that's one thing on my end. Anything else you can think of?
Yeah, I mean, I do think for some of our clients, one of the things that we started doing with them is we looked at their historical spending habits and we saw identify all the vendors that would look like they were routine. And I mean, I was literally doing this last night with a client for a client where we went through and we identified all the vendors that they pay on a very consistent basis. And then what we did is we created a simple list and said, okay, what day of the month is this bill due? Because we know that
Mhm.
they're going to pay it every single month. And then at the beginning of the week, we can send them an email and say, hey, you have this much cash in your bank account today. Here are the expenses or the payments that you're going to have to make this week. Here are all the vendors you need to pay. Here's the amount you have coming out for payroll. This is what's going to happen this week. And I think
Yeah.
what it does for them is it gives them a better idea to kind of plan ahead. Because if you know that, hey, this week I got payroll due, I got to pay some big vendors, and, I got, the lease payment or the mortgage payment, all of that is coming due in the same week, then you probably know, hey, some of this other extra stuff that we would probably want to spend money on, maybe this week is not the week to do it. Maybe we
Yeah.
need to push that out a week and stuff like that. So I think of, as part of developing that process is understand first, what are your regular payments that have to be paid? And what's the schedule for that? Because I think once you get a schedule for that, then how are you checking what's in your bank account versus what has to go out this week?
That's good, and I think, this comes back to the strategy part, right? Because I think sometimes people hear strategy and they're like, "Oh my gosh, it has to be this whole complex situation," but, like, simply just downloading or in our case, refreshing your spreadsheet of, "Hey, this is
Mhm.
what the expenses are. This is." I mean, end of the year is a great time to do this. What did I spend my money on? Identify what you spent your money on, when do those payments come out, right? When do I usually get paid by my customers? Because it's going to quickly tell you, do I have a gap? Because a lot of times business owners feel like, or they don't feel like, a lot of times business owners are like, oh man, like I just never have enough money. Like I'm always having to put money from my personal expenses into the business. Or for my personal account into the business to cover expenses. I just seems like I'm always running out of money. And the reason for that is because you don't really have an understanding of when payments are expected to come out, or you don't have a proper alignment. It could be both between when your money is coming in and when your money is going out, like when you're getting paid and when you have to pay other people. And I think the reason this is important to know, Terrell, is just like because we've seen it, like even for the property side, properties that we've managed, where the customer will give you or the company will give you an option of when you want the mortgage payment to come out. Like that's a perfect time for you to negotiate and say, hey, if I know I'm collecting payment from my customers by the 15th of the month, then I should probably try, if I have the option, to defer my large expenses to come out after that period. Because what that helps you do is build a buffer, like you said, where if you know that you're expecting your larger payments or larger outflows of cash at a certain period in time, then it'll allow you to put yourself in a position where you have enough cash coming in the door to be able to cover those expenses.
Mhm. Yeah. I mean, and I think that one, I'll hit on that one a little bit more because I think that is a really, really good tip that we'll definitely revisit on kind of just that timing factor. But I do think, with that process, I would say is if you're a business owner and you have a bookkeeper, is get your bookkeeper involved with like, hey, can you help us build out what our schedule for regular payments look like? They should be able to
Mhm.
look at your historical data and create that. Now, depending on what your monthly fee you're paying them, maybe they can do a weekly email where they tell you, hey, here's how much you have in cash. Here's what has to come out this week. That way you can kind of plan ahead on that, and you kind of get a better view and a perspective on that. Because there may be different things that you need to invest in, but you need a process for getting visibility to what's going on. Like, you got to understand what's the picture of your, your current cash, what's got, and what else is going to come out. If you don't get that picture, I don't think you can really move on to some of the other more valuable things. And I do think, to the point where you talked about, like, when it comes down to strategy, I will say I do think a lot of people do overcomplicate strategy. Because one of the things that I realize, and I was guilty of this before as well, but in leading the TL Turner Group and leading our team with our employees, and even with some of our key vendors that we're working with and stuff, and working with the clients, is I realized, like, I just don't have the luxury of making things complicated. And maybe it's just that, hey, I'm just I'm not a complicated person. And it's just like, I feel like I can't afford to make it complicated, to where I do think when it comes down to strategy, I always tell people is, how do we boil this down to the simplest course of action possible? Because I'm like, if it's complicated, either you aren't going to do it, and I definitely know your team isn't going to do it if it's complicated. So I always say is, boil it down to something that is very simple. Then you probably have a greater likelihood of moving forward if you can boil it down to something simple. And I think that is a simple step. Get a schedule for what you need to pay on a regular basis, and then at the beginning of every week, look at your cash balance, and then look and see how much money has to go out this week. What other stuff can I put on hold and stuff like that?
Yeah, no,
Now,
that's good.
was
And I was just gonna say one more thing, that I think this is something that we've even showed in we've done as a session, a work through session in our small business CFO program. Make it just to make it as easy as possible. We've said, even just take day 1 to day 30 or 31, however many days there are in that month. Have a column that shows your inflow, have a column that shows your outflow, right? Like, just go through the dates and say, hey, what's due on what date? When do I get paid on what date? And so one column shows basically money you owe, and then money you're owed on the other column. And so you just go in and you basically put, hey, on the first, as an example, on the first, rent minus $100. I know. Or let me give a realistic number, minus $1,500 for rent. And then, hey, let's say most of your invoices, your customers pay, I don't know, $3,000 a month or whatever it is. Okay, so $3,000 a month paid, maybe the third of the month or the fifth of the month. You can account for a lag, and if you have some customers that pay late. But that way you can actually see at any point in time, like, where's your cash balance? You start with your cash balance as a starting point of what's in the account, and then you just walk it out like that, like that. So I think a lot of times, to your point, Terrell, it is overcomplicated, and it really doesn't need to be. It can be as easy as that. And I think us walking through it that way in one of the sessions, I think it really helped kind of people to visualize it when we did it that way.
Yeah, I mean, and I agree, because one of the things that I try to tell people is that even what we presume to be some of the most complicated, things in the world is really just a series of simple things stacked on top of each other or compounded over time. Like, you know, I'm fortunate to where, at one point in my career, I worked at General Electric in their aviation division. So I worked around a lot of rocket scientists. And I have some friends that work for NASA on the rocket programs at NASA. And one of the things that I used to enjoy, that I still enjoy, is having a conversation with them when they explain kind of rocket propulsion and just how a rocket goes. And one of them explained it this way. It's like, the simplest way to put it, Terrell, is, have you ever taken a soda and shook it up and then just untwist the cap? And you'll see that that top is going to shoot up in the air. Just like, that is all you need to know about rocket technology. That's the basics of rocket technology. Is you got to build up a lot of pressure, a lot of power to push an object in a certain direction. And I was just like, you know what? That's pretty simple. And he was like, everything else after that is just that simple concept compounded over time. And I think the same thing happens when it comes down to cash flow and AP. It's the very simple concept of how much money do I have? Who do I owe? And when am I going to pay them? And
Yep.
I
And who
think
owes
in
me?
managing those three things, like that's the whole process.
Yep. I agree.
Mhm.
And I think oftentimes people say, like, if you don't understand, if you can explain something simply, you don't understand it yourself. You should be able to explain. If you have a true deep understanding of something, you should be able to explain it in an easy way. So, yeah. So
Yeah.
I guess so once you have your process nailed down, like we've given ample examples on even walk through a scenario of how to go through doing that. So once you have your process nailed down, what's next?
Yeah, I mean, I think once you have your process nailed down, I mean, at that point, it's just executing the process. Now, what I will say is we'll go through a list of what are some best practices because I think once you have that clarity of that picture, this is where things can get a little fun, or this is where you kind of maneuver some things around. And I think you
That's such
alluded
an
to it
accountant's
earlier.
comment.
I mean,
This is where
I,
things
I mean,
get
I
fun.
think,
I don't think
but I will say, even for non-accountants, figuring out how to make sure that you consistently have a positive cash
that you don't run
balance,
out of money.
like that
Yeah,
is
yeah, yeah.
fun. Because I
And I
mean,
will
it's
say the
no
end
fun
results. Yeah.
being. It's
Yeah.
no fun when you run out of money.
That's true. And it's no fun like struggling to be like, man, like, am I gonna have enough money to make payroll this week? No one wants to do that. Like, no one likes that
Yeah.
feeling. So I guess if you have a handle on it and you know, oh, okay, it's looking a little red. I need to do something about it. It's better to have the indicators and know you need to take action than be caught off guard and be surprised. Cause I think no one likes that. So
Yes.
that's fair. So it is fun. I would agree in
Yeah.
that sense. Yeah.
So the first one I would say is kind of what we started with is once you have this schedule of what regular payments you have, what timing it comes. If you put it out on a calendar, and let's say, for example, you list out all your key vendors and you just have from, the first of the month to let's say the 31st of the month or the
Hmm.
30th of the month, and you list out what day each payment is due. Once you look at that, you'll start to see that maybe a lot of your payments cluster around a specific time of month. And what
Yeah.
I always ask people is kind of what you were alluding to with rent is then take a step back and see, okay, can we renegotiate the timing on any of these things?
Hmm.
Because if you notice that all of your payments come out on the 15th, maybe that's not the best time for you to be making that many payments or to
Yeah.
have that much cash go out. Maybe it's
Yep.
time to look and see, okay, which vendors is this? And let me move the date out. Like, even if you're doing like software subscriptions and stuff like that, like you do often have a option to go into your account and change the due date or change the date that the money is going to come out of your account. And I think stuff like that will really help you in really aligning the timing. And that's a simple one because all it takes is a couple phone calls of
Right.
really moving things to where it works best for you. So that's the first, like, kind of best practice that I would recommend.
Yeah, that's good. And I think also one of the things is I don't think a lot of people realize how much potential you have to change those things unless they ask, right? And I think like especially if you're a business where you're ordering things in bulk, you have a little bit more leverage where you're like, "Hey, I'm placing, maybe a large substantial amount of orders or whatever and your orders are potentially maybe like a large part of that business. You can negotiate and say, "Hey, like can I pay because I'm placing XYZ in orders? Can I maybe pay this later? Is there any room to accommodate that?" And I think sometimes as business owners, we just take the dates like that we're given, but it's like, no, you have the ability to negotiate and you have the ability to maybe do something that's a bit more favorable. And I think another thing, Terrell, as you were talking that I realized like that's also important, I think is also being able to kind of connect the dots when you're just looking at the being able to negotiate some of those terms and understanding that, like also kind of thinking about it from a full circle point of view because even when you go back to like I know we did a completely different episode on AR, but I think just realizing the connection between both of those because sometimes I think there's the focus on okay, the money is coming out, but you're also going to think about in terms of how to cover the money that's coming out is what's the timing of your AR as well. And so I think that's you kind of have to play chess with both, right? To understand, what's coming in, what's going out, and kind of make decisions based on that. Because, like, for example, if you're calling to negotiate a timing and say, hey, can we move these expenses to can I pay rent instead of paying it on the first of the month? Can I pay it on the 15th of the month, as an example? And the reason for that may be because, hey, you have let's say, a service model where you're doing, I don't know, coaching or something like that, and payments come out on on the 13th of every month, as an example. And so payments come out on the 13th of every month, but you have to pay rent and most of your expenses are up front. Like, then you need to be able to look at those due dates and say, okay, if my if I'm collecting on XYZ date, when do I need to have, does it make sense for payments to come out of my account?
Yep. No, I think that is a great way to look at it. And one of the other tips I think is using a credit card, because what in some of these, pretty much what a credit card does, it extends your payment days. Because let's say if you have to pay this invoice every 30 days. Well, if you use a credit card, it adds a little bit more time on it. Now, you definitely still want to pay your credit card bill. I
Please.
mean, I would say is we don't want to put it on the credit card and never pay it. The
Yeah.
objective of it is, as you're looking at kind of what you just talked about, Lola, is I tell people is like, hey, if all of your bills are due on the 15th, but your customers don't pay you until the 17th, use a credit card to pay the bills on the 15th if the dates can't be moved. And then when your customers pay you on the 17th, then you can pay the credit card off, because what it does, it just buys you that couple extra days for you to get the cash in to pay it off.
That's really good. And, I don't know if it's just because, again, I don't know if it's recovering. I'm an old Dave Ramsey fan. So I'm not old, but you know what I mean? Like, I think back on that. So for my advice, when people talk about using credit cards in their business, I absolutely think it makes perfect sense to leverage that credit card to give you more time. But I would caution and say two things. One, actually do the exercise that Terrell and I just walked through. Like, make sure you go through and you're making that plan. And then two is understand, like, clearly, what does that come with? If you're making a decision to use that credit card, what are the implications? You don't want to not pay it off and just continue to kind of grow the balance or whatever. Especially if you have the money to be able to plan and make those payments.
Absolutely. Absolutely. I mean, and I think you make a really good point on that, because I think so many people can get caught up on that of not, you know, not paying the bill. It's just like, hey, I got the
Yeah.
vendor off my back. I
Yeah.
got the vendor off my
Now you
back.
have
So
problems. Now you have
now
problems.
now the credit card company, now what I will say is the credit card company won't be as pushy, because the credit card
That
company is
interest.
going to charge you interest. And so if
And
you
their
don't pay
interest rates are
the credit card,
ridiculous.
the
Yeah.
interest is just going to keep growing.
Their interest rates are ridiculous. I mean, I think interest rates, I think the last one I saw recently was what, like 17, 18% interest rate. I think was one of the
Yeah.
ones I've seen, maybe even 23% interest rate. So, like, I'm not opposed to using credit cards because I think that it helps. I mean, it helps build your business credit. That's
Mhm.
just the reality of doing business in America, and having a line of credit and having access to more capital. Like, people banks want to see that you have the ability to pay that thing off, but at the same
Mhm.
time, you got to be wise about how you're spending that money. And I think that's just my philosophies. I think we've said it well before, is just don't abuse it. Like, leverage it and use it
Yeah.
to help your business grow and develop. But don't use it as a crutch, and, I guess, to avoid you from actually doing what you need to do.
Yep. And I think
Yeah.
another piece, or I could say a best practice is I think you got to rank your vendors, because I think
Mm,
you do need to look and see who are all the vendors that I'm paying, which ones are essential to operating my business,
that's
like
good.
which ones are the more important ones, because as you go through that list, even for us, when I went through that list for the TL Turner Group, and I looked at, hey, who are all the vendors that you and I are paying? And I'm just like, all right, we don't need to pay this person, or hey, these three vendors are critical because, like, hey, we depend on this software to work. We need
Right,
that to
right.
work. We depend on this vendor or this third party to do X, and this one to do this. And so we needed to keep those relationships strong. And I do think a lot of business owners don't really look at it that way. They're just like, hey, they treat all their vendors equally. And I'm like, well, one of the things that I can say as a business owner, I'm just like, do you treat all your customers the same? Or let's say
Yeah.
if there was a customer that made up 15% of your business, would you treat that customer the same as somebody who just walked in for a one-time service or a one-time product? It's just like you would treat them
Yeah.
differently. And I do think that people miss out on a lot of opportunity when they're not communicating with their vendors and they just kind of ghost them on the bill. And then their vendors get upset. Their vendors start sending emails, or their vendors start
Yeah.
threatening, like, hey, we're going to cut you off. But I think
Yeah.
if you were in communication with, your vendor would probably be like, hey, I understand where you're at. I understand what's going on. I can give you a little bit more grace. But when you just ghost them, I think you're kind of burning a bridge.
Okay, so when you said this, I thought about something that I think a lot of people don't talk about. And what that is the fact that, especially maybe if you're earlier on in your business or you're just struggling with cash flow period, to where, let's say maybe you're not really selling like a recurring service, let's say you're selling products, and some months are better than others, right? So if you're in the stage, like, I think that exercise you just mentioned is really good to do if you run into a situation where the money that's coming in is a lot less than the money that needs to go out. Right? So, like, you might run into situations where some months, like, I think COVID was a perfect example of that, or just slower months, right? Some businesses are more seasonal, and hey, the summer is a really good time for them, and then when the weather starts to get warmer, they have or colder, they have months that are slower than others, but you still have to pay rent. Like, you still have essential expenses. And so I think at that point, Terrell, like, when you said that, I was thinking to myself, I'm like, all right, then at that point, that vendor list is even more important than not, because
Yeah.
you need to understand, like, who can I not afford to skip paying? Like, if I only have a fixed amount of money this month and my cash flow is looking a little bit tight, and let's say I don't have the opportunity to maybe go take from my personal funds and put it back into the business, like, who do I need to pay? Who do I need to pay to keep the lights running, and the business running? And I think that vendor list you just mentioned is going to be extremely important. And I don't think people are honest enough. Like, I personally haven't heard anyone really talk about that, but I think there are going to be situations for some business owners who it's like, man, like, my business is suffering or my business is going through challenges right now. How do I navigate the AP situation? And I think that vendor example that you gave is such a great way to do that, because it really helps you understand, like, who's a priority and who do I have to negotiate with? Because we're not saying, like, be quiet. I think that's also another factor, is like, don't be quiet and just avoid people
Mhm.
if you owe them money, right? That's a good opportunity to kind of have a discussion and say, hey, you know what? Like, my business is going through this right now. Can we come up with a payment plan or some sort of agreement for me to settle this? Because that's a lot better than just ghosting them. So I think that's a
I
really good
agree.
point now that you actually mentioned that.
And
Yeah.
and I think even, as we're, a lot of business owners listen to this show. And one of the things that I learned as a business owner is, as much as I think about this with the vendors for our company, I also recognize that we are vendors to other people's company.
Exactly.
And I want to make sure, like, I wouldn't want our customers to just go quiet and ghost me if they have an outstanding invoice. I mean,
Right.
because then that causes issues for us. Now, like I said, thankfully, like I said, from the start, we built up a buffer to where, hey, there's enough cash there. So where if things happen, where, like, now, I mean, we're good because we're constantly in a cash flow positive position. And we're strategically timing things. Like, when you spend 10 grand on a commercial and filming content, you spend another 10 grand on a marketing plan and strategy. I mean, you're spending another 2 grand in the recruiting and hiring process, to where it's just like we're strategically, moving those things around and keeping in mind that, hey, with our customers, let's make sure we're having continual touch points, because if their cash gets tight, we want to know, because one of the things that I do recommend for business owners to do is, if you know your cash is getting tight and I'm like, you can't pay your vendors, maybe have a discussion with your vendor of scaling back some of your services. Because
Mhm.
there was a client of ours that, they were paying us $1,500 a month. As their accountant, I can see what's going on with their numbers. I was like, hey, let's scale this back. Instead of us meeting on a weekly basis, let's scale this back and let's give you a package that's $1,000 a month. That way it frees up $500 in your budget to invest in other areas you need to invest in. But we can still support you. It just won't be to the same level as before. And I
Yeah.
think, as a business owner in general, I think if you do business to business kind of transactions, you have to recognize that you're somebody else's vendor, and you might have to get the same tips we're giving you, they might be using with you. So it's like, as we're telling them, like, hey, renegotiate your terms, your customers. And then for many of the business owners, what I find to be funny is many of the business owners who listen to this show, like, their customers listen to this show too. So like,
Exactly.
while they're renegotiating their terms, like, don't be surprised if your customers pick up the phone and call you and say, hey, can we move our due dates on some of those?
Yeah, and I will say one of the things I wanna ask you a question, but I will say, like, one thing to note is, and I've never seen a situation where this is not true, people are always more happy to get paid something than to get paid nothing. So, even if it's
I would say that
negotiate,
depends.
it depends on who, because who depends on who? If
I
somebody
think
owed you
it depends.
$1,000.
Like, this is where I think the relationship really comes in, because I
Okay,
have
that's
seen
fair.
situations where, I have a client, they are like, you know what, this person has a bill that is X. Let's say this
Yeah,
person has a bill that is $32,000. We need to collect on this. This person sent in $1,000 towards that $32,000 bill. And
listen.
the business owner was mad. Like, if you were going to insult me like this, you should have sent in nothing.
Alright, that's fair. That is a valid point. That is a valid point. What I'm saying is, okay, at least they're paying. Okay, I have a question. Was there communication prior to this about, hey, we're negotiating, we at least want to send something through right now, we'll make up, and this is our plan to make it up, or
No,
no, it was just more of a
no,
payment, a
it was
partial payment?
no communication.
Okay, then that's different. That's different.
Mhm.
Because like that's different. Because I'm like, there needs to be some sort of communication, at least a payment plan, and say, okay, can we meet in the middle somewhere? But for me, 32 $1,000 on a $32,000 invoice? Yeah, fam, no. Immediately, no. This is
Mhm.
not a deposit. This is this is not a deposit. Okay, so that's fair. I do have a question though. You did talk about like having a buffer and being cash flow, making sure that your business is cash flow positive. How long would you say it took us to build the buffer? So like for example, if someone is in a position right now where they're like kind of going from income to, I guess I don't want to say paycheck to paycheck because it's not really paycheck to paycheck, but they're really heavily depending on, like, basically the money that comes in the month. They need that. Like, if one customer defaults, they won't be able to cover their expenses.
Yeah, I
If
mean,
they're
it
in
took
that
us
position today, what would you say is, like, a realistic time frame to say, "Okay, this is how long it
so
may take
it
your
took
business to get
initially
there?"
it took us 8 months to get there. Of, hey, we took a percentage of our, well, one is we had to get the clients, and then as we got the clients, we intentionally kept our expenses low while we were building up getting the clients. And then after our clientele got to a certain point, then we pulled the trigger and said, hey, we're going to hire some more employees, which meant our costs went up a bit more.
Mhm.
Even now, we already have what, four staff that we're working with. We're going to be hiring a fifth one. But part of that was, I'm like, I need to close a couple more client deals before I hire this fifth person, because I need to make sure that there's going to be enough buffer in the cash that's coming in to be able to cover their salary, or what that's going to be, and the other operating expenses of the business. So I would say is starting off, it took us 8 months. Now I would say, that depends on what your cost structure is. Now, if you're a business who has, let's say if you're upside down in your business and your monthly expenses are, let's say, 10 grand a month, and you're only bringing in $9,000, like, you aren't going to build a buffer until you get your revenue up. And I do
Yeah.
think, some people, I think some people, like, unfortunately, I think some people, like, kind of, I don't know how I would really describe it. It's just it's not an entrepreneurial way of thinking. For some people, where it's like, hey, you know, let's say if your expenses are $10,000 a month, you want to have 3 months of cash on hand, and they're just like, well, okay, well, we'll just, we'll get there when we get there. I'm like, no, let's develop a plan. What can you sell? Like, let's be real
Mhm.
entrepreneurs. What can
Mhm.
you sell? What service it, like, let's create a one-time, one-off service offering that you can provide to go do something, to hustle, to get that $30,000 in there, so we can actually set a goal to get there. And,
That's good.
that's one of the things that we had to do is, it is, by the time I realized, like, hey, we want to have a buffer. So for 8 months, I was just like, hey, I started doing like one-on-one consultings more, until, and all the money I made from that consulting, I put in the reserve account until I'm like, all right, we're good. We got about 3 months worth of expenses on hand, that if something happens, I got 90 days to figure it out or shut this business down.
That's really good, and I think that gives you that does so much. I think one, it helps you, like, if just having that buffer is comforting because something could happen. You could have something in the business where, like, you need to invest money or you need to spend money relatively quickly. I think also, like we talked about, if a customer doesn't pay you on time, and then the worst case scenario, if you lose a customer, like a large customer, right? It helps you kind of basically manage that situation until you can either increase your revenue or cut back on your expenses, which, like you said, I think it really just comes down to getting scrappy. Like, you just need to go find, how do you make more money in these areas? How do you compensate? How do you cover that? But until you figure that out, that 3 month buffer or whatever the buffer it is that you decide that you want in your business, I think is going to help to be able to do that. So that's good insight.
Yeah.
And
Yeah. So
what
I
do you
think,
say is like a reasonable buffer? Just real quick, last question. So, like, for us, is it 3 months? I should know this.
I mean, I always tell businesses, you want to start target 1 month. I mean, because, I mean, if you think about it, I tell them, don't think about like, oh, we want to have X amount of months. I'm like, you really have to think about your business. And you have to say, okay, all right, because if you have a 1 month buffer, what that means is, if something happens, you got 30 days to figure it out or shut the business down. Like, is 30 days long enough? Like, when you think about the type of clients you do business with, is 30 days long enough for you to go take some action and, get some money coming into the business to keep it alive? But if your sales cycle is longer than that, let's say if your sales cycle, let's say if you lost, half of your customers today, and you had to go out and find more customers, how long will it take you to onboard them? If it's four
Mm,
months, then that means your buffer probably should be 4 months.
that's
Like,
good.
you need your buffer to be what's right for your type of business. For us, what I do know is, what, and to be honest with you, 3 months is longer than it needs to be. Because if something, let's say, for example, if we lost half of our clients, there is stuff that I can go do tomorrow. Well, I'll say there's stuff that I can go do next week to make extra money to cover the gap. But I mean, like I
Mhm.
said, as you start making more money, you can start to pad, and add more cushion if you want to. But I always tell people is, think about your business. If you lost half of your customers today, how long would it realistically take you to start rebuilding what you lost? And if
Yeah,
that's 1 month, start with a 1 month buffer. If that is 3 months, you need to target having a 3 month buffer, because you're going to need that 3 months to rebuild so the business can continue.
that's good. That's really good. I think that's like a perfect indication is just remembering, I guess, it's not a one size fits all. It just varies depending on what type of business you have. It varies depending on where your business is. Like all of those things are important to consider. That's really good.
Yeah.
Any other
I mean,
tips?
and that's one of the I will say that's one of the things that I really like, about the questions that we get from different business owners in the small business CFO program, because that's the type of, questions people have where people can ask those questions and say, "Hey, here's where my business is." And because like I said, it's a private membership group, we can, get in details a little bit more because like, hey, everybody is part of joining signs the NDA. So none of the information that gets disclosed, people can't just go out and, share that information.
Yeah.
And it's not like people can, can just record the meeting and take screenshots of other people. So people can be a little bit more open and transparent and say, hey, the costs for my business are, my regular costs are about $12,000 a month. And then we can talk through, okay, what type of customers? What does that sales
Mhm.
cycle look like? And we can
Mhm.
come up with like, hey, based on all the information you're giving me, here's an answer that I think is right for your business. And like I
Right.
said, because we can't necessarily do that here on the podcast because we're talking to so many people. But I think
Right.
in the smaller private groups, you can, provide more clarity. And I just love the way that people in the group are engaging, asking those specific questions, getting the insight. Because if you hired a CFO, that person would be dedicated to helping you figure that stuff out. But we know that
Right.
a CFO can be expensive. I mean, CFO may cost you minimum $2,500 a month on up to like 8+ grand a month, and most small business owners can't afford that. So
Right.
coming into the small business CFO group, they can ask those questions. So yeah, I think it's definitely a topic that every business owner should be diving into accounts payable and the strategy behind it a lot more than they do.
Absolutely. And I will say, just remembering, I think to keep things simple, keep it simple, keep it easy to use. That scenario that I walked through, who knows? I might put that in the show notes if I'm feeling generous. The spreadsheet that we walked through of just the beginning balance, like just how to calculate that and make it
It
simple.
probably won't be in it won't be in the show notes.
Terrell is like immediately no.
Well, it won't be in the show notes because we promised the people in the small business CFO group
Oh
like,
yeah, that's
hey,
right.
this is exclusive for you guys. So
That is right.
since
All right, fine. So
they
no,
asked for that
but
first. So
go back and play that. Go back and play that portion that I shared, and you could possibly build your own. So
yeah.
but yeah. So
But yeah, so
anything else you
I
want to
do
share on
want to,
this
before
topic?
we wrap up, I do want to talk about the tax tea of the week. This one I think is very interesting because this is a situation that a lot of business owners are very, very susceptible to having someone
Mm,
steal this kind of money from them. And I think that that's why I think it's very important. So, for this week's tax tea, we are talking about a former employee of a university that is believed or allegedly has siphoned off or stolen $3.5 million from the
mm.
university. And this has been going on for like 6 years.
Oh
No
my
one
gosh.
knew. Now,
First of
that
all,
is
what
a
is this
long
lady's
time.
title? Let's leave with this. What is the lady's title? What is her
I
job?
forgot what the lady's title
Director
was.
of finance.
Okay. Yeah. So the lady was a
Mm,
director of finance. And this is something that hit home because I do think sometimes, accountants are reluctant to mention this, but
mm.
I'm not a reluctant accountant. I'm just going to be honest about it is that a lot of businesses, the person who ends up stealing is the person who's the accountant or the finance person because there are no
Yeah.
checks and balances for that person. I
Yes.
mean, and in this case, there were no checks and balance. And I'll be honest, like I sit on the board a for a university. And that was one of the topics that we talked about because we looked at a series of different universities that have experienced a similar thing where someone
Mhm.
had embezzled and stolen money from the university because there's a ton of money coming in. And for most
Yeah.
business owners, when they're talking about, hey, there's a ton of money coming in and it looks like it's going right out the door, I'm like, well, do you know who that money's going to? Because
Yep.
if you don't know who that money's going to, then it could be going to someone that it shouldn't be. And it may not be to the scale of $3.5 million. It may even be down to the scale of like, hey, we were looking at one client, we were doing a spend by vendor analysis and asked a question like, why are you spending $120 a month on Netflix? I'm like, there is no Netflix account that is $120 a month. And he was like, oh, it's
Shady.
probably multiple accounts. And so I was like, okay, who? Because one is, this is a business account. I mean, this is your business. So whose account? And as they dug into it, they realized that the secretary was running like 4 of her family members' Netflix account through the business. And I'm
The
like, talk
audacity.
about an awkward conversation.
Immediately fired. What is this nonsense? Like, I think, you know, honestly, I think this is why, like one of the things that we've talked about in one of the accountability portion that you mentioned is so important. Like, just the reason why a lot of people that get away with these kind of fraud stuff are people that do the accounting, or people that do the finance, is because, like you said, there's no checks and balances. I think that's why it's so important. Like, one of the things that we talk about, even as people kind of get out of the small business CFO program and are like, hey, okay, fine, my business is growing, I'm ready to go find an accountant. That's one of the reasons why we have that whole checklist of what to look for in an accountant. Because a good accountant, right? A good accountant should be able to, or I guess a non-reluctant accountant, as you put it, should be able to tell you, hey, these are the things that you need to be looking for. Any flags you need to be looking for. These are the kind of questions you need to be asking me on a monthly basis as your accountant, to tell me, for you to know, like, hey, are there red flags? Is there something that I need to be looking for? Like, there needs to be a set of questions as a business owner that you're asking your accountant that they should be able to answer. And that will kind of help you gauge, like, hey, is this person saying the right things? Like, hey, are they aligned with kind of what I'm thinking? Is there something I need to pay attention to here? Because as much as we talk about, like, we are extremely good at what we do from an accounting and finance perspective, the TL Turner Group is probably the best in my opinion. But I think it's very important to still have a sense of accountability, because at the end of the day, and this is something we talk about whenever we do the tax fees, Terrell, like, the IRS is going to hold you accountable. Like, nobody else is going to hold you accountable for your business. Like, you are going to be ultimately responsible. So I think it's extremely important as a business owner that you understand enough to be dangerous, and you understand enough to be able to ask your accountant questions where, like, if somebody says something, like, for example, that Netflix transaction, like $120 on Netflix, like, they need to be able to give you that kind of information. So then, you know, like, you're running the business, you know what's coming in and out every day. You can then be like, hey, this doesn't really add up, or the math isn't really math in here. Like, what do we need to do differently? And I think a good accountant should be able to equip you with those questions, so you know the right questions to ask, and you know when you can identify if there's red flags.
Yeah. And what I will say is, what we will include in the show notes is a link to the checklist that I was working on, because I've been seeing this happen more and more about embezzlement. So there's a checklist I'm working on of the 5 things that you can do to protect your money from being stolen. And I'm putting together these 5 things that every business owner should understand and do, so that we can include in the show notes. So if you want
Okay.
that checklist, there'll be a link in the show notes where you can click on that. You can get, hey, here are the 5 things to protect your money from being stolen.
Mm-hmm. Awesome.
So that is our tax tea of the week, and that is our episode. So thank you guys so much for tuning in. Until next time,